Good day, everyone. Good day, everyone, wherever you are hearing me from. Good day. Hope you all are doing great. Right. So, today in today's class, right, what we'll be looking at is risk management you need in Forex trading. Right. So the risk management you need in Forex trading. So I discovered that the reason why I'm sharing this video to every one of you is that I discovered that most Forex traders out there, most especially the newbies out there that just enrolled into the Forex environment, the newbies out there, what they do is that they don't have a proper risk management when it comes to trading. So I see a lot of people, or I see a lot of newbies out there that they just use any lot size. They don't even know how to calculate their lot size. They don't know how to set a proper risk management for their trading. They don't have a trading plan when it comes to Forex, right? Which is not supposed to be. So this video, I'm basically doing this video to show you guys how you can manage your risk in the Forex market so that you won't lose more than what you plan or more than what you budgeted for to lose in the market, right? So I'm not going to waste much time. This video is going to be short, right? This video is going to be short because I want to make it as short as possible so that you gain what is necessary for you to gain. So I want every one of you to sit back. If you don't have a notepad, try to get your notepad and pay attention to every details, right? Pay attention to every details that I will be discussing in this video. Like I said, after this video, the benefit of the good thing you can do for yourself after this video is to implement whatsoever thing that you've learned in this video, right? Implement it, practice it, and I am very sure that this will take your trading to the next level, right? So basically what we'll be looking at in this video is the risk management you need to know in the Forex trading. So without wasting much of our time, let's just go into it properly, right? So let's go into it properly. So basically, the things we'll be looking at, we'll be looking at your lot size. We'll be looking at your lot size for you to know how to manage your risk in the market. We'll talk about your account balance, the account balance. After that, we'll look at your P, the P that you really want to risk in the market, your P, and the amount you actually want to risk in the market. So these are basically what we will be looking at and what we will be discussing, right? So once you know all of this, believe you me, this will take your trading to the next level. It will take your trading to the next level, right? So just pay attention to everything that I will be discussing in this video and make sure you jot them down. And after this, after this, go out there, implement it, and then start seeing progress, right? So let's say your account balance, right? Let's say your account balance that you have in your trading, either your MT4 or your MT5 is, let's say you have $1,000 in your trading account, right? If you have $1,000 in your trading account, what you need to know, or what you have to understand, is that you don't just enter a market because you have $1,000 or because you have a $10,000 account balance. You need to understand the PIP you want to risk in a particular market, and also the amount you are willing to lose in the particular market. Let's say, for example, if the market goes against your analysis, how much are you willing to lose in the market? So these two things, you need to understand these two things very well. You need to understand these two things very well before you can even say you want to place a trade or you want to enter a market, right? So you need to understand the PIP and the amount you are willing to lose or risk in the market. So for me personally, I don't do more than 20 pips, right? I don't do more than 20 pips. I don't do more than 20 pips in the market. For me personally, so you as well, you can decide, or you can choose the amount, the pips, right? The pips you want to lose or you want to risk in the market. It doesn't mean you should go for 20 pips, right? You can choose the pips you are willing to risk in the market. But for me personally, I don't go above 20 pips, right? That is my own standard. And that's 20 pips is also the same thing as 200 points, right? It's also the same thing as 200 points in the market. So once you know the P you want to risk in the market, based on this P, how much are you willing to now risk, right? How much are you now willing to risk in the market? You have $1,000 account balance, but out of this $1,000 account balance, some people would say don't risk more than 2 to 3% of your trading account, right? That's fine. That's fine. You can decide any percentage you want to risk in the market, but for the purpose of this class, let's say you want to risk $50. Let's say you want to risk $50 out of $1,000. That means if the market goes against your analysis, you will not lose more than $50. So you already have a budget for yourself. You already have a plan for yourself that whatsoever that comes out in the market, you will not lose more than $50. The benefit of this thing is to control your emotions in the market, because you already know what you are risking. It's not that you are just entering a trade and you are seeing the market going against your analysis and you started shouting, or you started touching or having some feelings with your emotions, right? So this will actually help you to build your confidence and also to help you to build your emotions in the market, right? Because you actually know what you want to risk. You are risking $50. You are not losing, or you are not risking more than $50 in the market. So you already have a plan for it. You already have a budget for it, right? So what you just need to do, how do you go about this? How do you go about this, right? So it's very simple. It's very simple, right? It's very simple. So what you just need to do is to do your small calculation. Right? So what you need to do is to do your small calculation. So let's do a small calculation. let's do a small calculation here, right? So let's do a small calculation here. So for you to now know, or for you to not risk more than 50%, $50, right? Just do your calculation. What you need to do is to get your lot size, right? Is to get your lot size, and your lot size will be equals to your PIP risk divided by your PIP risk divided by amount, sorry, your amount risk divided by your PIP risk. So your amount risk divided by your PIP risk, that would simply be what's our amount risk? What's the amount that we we want to risk in the market, right? So that's $50. We are not risking more than $50 of our account. So your $50 divided by your PIP risk, or your points, right? Or your points, PIP risk or points, right? So your point is 200. So your point is 200. So if you divide these two, what you will have is 200 points, right? So if you divide $50 by your 200 points, what you will have as your lot size will be 0.25 lot size, right? So what you will have is 0.25 lot size. What you just need to do is to go to your MT4 or your MT5, depends on the one you are using. You don't risk, or you don't risk more than 0.25 lot size. So when placing your trade in on MT4 or MT5, your lot size should be 0.25. So if you are using 0.25 as your lot size, that means if the market goes against your analysis, you are not risking more than $50. So it is very simple. It's not just that you will it's not that you will just use any lot size that you want, or you just go ahead because people are using one lot size, people are using 5 lot size, so you too want to use 5 or 3 lot size. No, it doesn't work like that. If you are that kind of a trader and you are a newbie, you are risking on the high risk, right? You are on the high risk. So what you just need to do is to get the lot size you are willing to lose, or you are willing to risk in the market. Do your simple calculation and get your lot size. So with this calculation, even if the market goes against your analysis, you will not lose more than $50 that you have planned for based on this simple calculation. So everything you've gotten from this class, I want you to go out there, implement it, practice it, and see the reward, right? Practice it and see the reward, see the outcome, and I believe this would actually take you to a greater position in the Forex market, right? So thank you, everyone. Thank you for listening. Watch this video. I'm going to upload this video on the YouTube. You can actually go to my YouTube channel, watch it. If you don't understand, watch it again till you understand, right? Watch it again till you understand. It is very simple. Don't just use any lot size. Calculate your lot size before entering the market. Know the pip you are willing to lose, or the points you are willing to risk in the market. Know the amount you are willing to risk in the market. Do your simple calculation, get your lot size, and place your trade. It is quite simple. Thank you, everyone. Bye.